All right. Hello, everybody. Welcome to the Premarket Rundown for March 17th, 2023. Welcome, everybody. This being our daily session where we go over all the news and notes necessary to keeping you consistently profitable here in these crazy markets, as well as the mindset necessary to break that news down. I am your humble host, Adam Holland, stock options expert, as well as expert market strategist. And we're here to continue to build on what has been a great week, right? It's been a very crazy week, a volatile week, a week full of, the aftermath of black swan events, once in a decade type of events, but we're still managing to stay in the green, stay profitable, and continue to navigate these tumultuous waters. So just dove right into it today. Didn't have any pre-market thumbnail, didn't have anything, had a busy morning before this. And I was like, you know what, we're just going to get on the stream. Overall, the stream, normally starts at 8:40. Now you can kind of look at it, start some point between 8:40 and 8:45. It really depends. I have to do more to set up for this stream than I did for the Instagram stream. So as a result, it ends up getting, most often pushed back 4 or 5 minutes, something like that. But sometime between 8:40, 8:45 is when you'll see me popping on this screen. It really depends on if I feel like taking the time to create the thumbnail or not, because sometimes creating that thumbnail before can put me in a little bit of a time crunch. But let's dive into the news that we have going on this morning at first, right? As always, or just first, not at first. First, as always, you want to make sure that you put your one in the chat, whether you're watching live or via replay. Can we get a Zoom camera? Thank you. Signifying your intention of getting 1% better by the end of the session. That's what we're trying to do. All you got to do is aim to get 1% better each day. You do that, I promise you'll change your life and it'll be an amazing experience, right? You'll see things start to happen in leaps and bounds, and it'll be because all you did was aim to get 1% better each and every day. So let me see if I can. There we go. It was looking a little too bright for my liking. Oh, that's why. There we go. All right. Now we can go back. There we go. Boom. It's because I had my lamp on as well. It was throwing everything off. But yeah, let's go ahead and dive into the news that we got going on today. Again, chart topping headlines here. Wall Street breakfast, another bank rescue. So another bank rescue. The banking space sees another rescue deal in just a matter of days, with the nation's biggest banks agreeing to deposit around $30 billion with troubled First Republic Bank, ticker FRC. The big banks include JP Morgan, Bank of America, Citi, whose ticker is C, Wells Fargo, whose ticker is WFC. They will contribute $5 billion of deposits each. Goldman Sachs and Morgan Stanley will provide $2.5 billion each. PNC Financial, ticker PNC, BNY Mellon, ticker BK, Truist, ticker TSC, and U.S. Bank Corp, ticker USB, and State Street, ticker STT, will each contribute $1 billion. Now, market reaction. While investors initially cheered the news, First Republic shares reversed course after the lender said it was suspending its dividend. It said it is focused on reducing borrowings and evaluating the composition and size of its balance sheet going forward. Billionaire investor Bill Ackman denounced the rescue deal, saying spreading the risk of financial contagion to achieve a false sense of confidence in FRB is bad policy. Now, in terms of background news, First Republic is exploring strategic options to improve its liquidity, including a potential sale and significant deposit outflows following the collapse of Silicon Valley Bank, ticker SIVB. Ratings agency S&P cut the bank's rating to junk on outflow risks and net interest margin pressures. Now, in terms of some Seeking Alpha commentary, contributor Yannick Frey believes the sharp decline in the regional banking sector presents a prime buying opportunity, but only for investors who can handle the strong price volatility. As for First Republic, its risk management is favorable because it does not invest in exotic derivatives, does not invest in junk bonds, does not issue credit cards or auto loans, and has no negative repayment loans. So this is news that kind of broke yesterday at the end of the day. And we talked about, the implications that has for JP Morgan, right? Investing and sweeping up these small regional banks in order to kind of further increase its stranglehold, that it has at this point on the banking sector, with it being the biggest bank. This allows it to even further its reach. So we'll see. This bank saga is ongoing, right? There are a number of banks that have, positive looks or had positive looks kind of coming out of yesterday. It's important to remember that, again, no matter how much profit is flying around, no matter how much we run, there is still this risk that we're not out of the woods yet. So again, for everybody who, might see yesterday and they're like, okay, time to go, go crazy, full port, right back into the market, this is still not the time, right? This is still not the time for that. Yes, there are opportunities out there, but does that mean that you completely ignore the fact that we have major regional banks collapsing overnight? No, right? And we're not out of the woods with that yet. So still give it some time. You rather be patient rather than sorry, because that's the issue. People get FOMO, they FOMO in, they go heavy, and then, a bad event happens on the back of other bad events, and you can at that point say it caught you off guard, right? Last Thursday, last Friday, yes, you had the excuse, okay, this caught me off guard. But now that you know the banks are failing, you don't want to be in that position again where you are very heavy and then this happens, because, again, fool me once, shame on you. Fool me twice. Fool me twice, can't get fooled again. So if you're willing to be fooled twice, then that ends up being on you. So I'm not saying that you have to completely sit out, but just recognize that there is that risk. And instead of buying 5 contracts, maybe you buy 2, right? Option contracts per position. Or instead of buying 2, maybe you buy 1. Let's see here. In terms of rate hike predictions, 25 basis point hike most likely. So market expectations have skewed firmly towards a 25 basis point rate hike by the Federal Reserve as its monetary policy meeting occurs next week. The shift has been spurred by recent turmoil in the financial sector and the European Central Bank's decision to hike rates by 50 basis points yesterday. The European Central Bank's move came amid calls for central banks on both sides of the Atlantic to dial back on policy tightening in light of the banking crisis. Ahead of the release of the ECB's decision, markets were pricing in a 56.8% probability of a 25 basis point hike by the Fed next week, according to the CME FedWatch tool. The probability of no hike was at 43.2%. Today, the probability of a 25 basis point hike stood at 79%, with a 21% probability of no hike. The larger issue of protecting the banking system and the economy takes center stage. The Fed will have to fine-tune between fighting inflation and over-tightening, said Seeking Alpha contributor Fountainhead. So overall, this is just good to keep an eye on, right? We have the next big interest rate decision next week. And, everybody's kind of trying to glean any little bit of information that they can to figure out what the Fed is likely to do. And as of right now, it looks like markets are pricing in an expectation of 25 basis points, right? A 25 basis point hike. At some point, there was expectation of no hike, given how much turmoil has ensued. We'll see what ends up happening. I think regardless, we'll be hanging on Jerome Powell's every word, even more so than usual, given the situation with banks. Like, this is going to be very, 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 high tension next week, hearing what he has to say, and kind of what the, what the Federal Reserve's plan is moving forward, given kind of all this turmoil, all this uncertainty, and now all this financial sector weakness. We might see some type of pivot, right, in terms of how much they're looking to hike this year, or the magnitude with which they're looking to hike, et cetera, et cetera. Sorry about that. Just realized I am literally so intensely dehydrated. Need that water so badly. In terms of the next segment here, one step closer. So Microsoft submitted remedies to the European antitrust regulator for its planned $69 billion acquisition of video game giant Activision, as it tries to win the regulator's approval. The European Union deadline to rule on the Activision deal has now been extended to May 22nd after the concession offer was made on Thursday, according to the EU regulator's website. Details of what remedies were offered weren't provided. Microsoft is expected to secure EU approval thanks to its offers to license video games to its competitors. However, most investors are focused on the UK's antitrust authority's decision, as the deal has faced backlash in the country. Seeking Alpha contributor Bodon, not even going to try that last name, Bodon, called the Activision deal a game changer, but flagged the risk of the acquisition being blocked by regulators. So this is just kind of, again, an update in this ongoing saga that we have happening, with regulators and with Microsoft. And it's just been a whole lot tougher in terms of regulatory scrutiny under this new administration, right? And granted, this is in Europe, but overall, the Biden administration, the FTC, everything has been a lot tougher for deals to go through, acquisitions to go through. And it looked like Microsoft is getting closer and closer, at least in Europe. I don't know about here. In terms of here in the U.S., it was, kind of struck down initially. So we'll see if it can get the green light in Europe, then maybe that ends up being the green light for it here in the U.S. In terms of insulin news, $35 insulin cap. So Sanofi, ticker SNY, slashed prices for Lantus, its widely prescribed insulin, in the U.S. by 78%, effective from January 1st, 2024. It will also establish a $35 cap on out-of-pocket costs for Lantus for all patients with commercial insurance. The move follows other drug makers that reduced prices for their insulin products, bowing to widespread pressure over the costliness of the critical diabetic therapy. Novo Nordisk, ticker NVO, Novo Nordisk, ticker NVO, will slash the U.S. list prices of several insulin products by up to 75%. Eli Lilly, ticker LLY, is cutting the prices of its insulin drugs by 70% and introducing a program that will cap out-of-pocket expenses at $35 per month. So that's awesome for everybody, struggling with diabetes, getting better access and, better priced access to insulin. Earlier this month, the U.S. Senator Bernie Sanders unveiled a bill that would limit the list price of insulin at no more than $20 per vial. That, of course, isn't necessarily good for the companies that make it. Of course, it's better for people, right? This is good humanitarian news, but overall, right, it means less profit for these companies like Sanofi, Novo Nordisk, and Eli Lilly, who obviously were probably making a killing off of the high prices of insulin, but it can make us all feel better, as humans, recognizing that people aren't getting absolutely priced out of medicine that they need literally to just survive. So in terms of today's markets, let's see if we are anywhere near where we were when this report came out. Looks like we're a bit lower, which again is of no surprise given what we went over yesterday during our Q&A. Right, we talked about how we closed underneath price target number 2 on SPY, the S&P, and how we were likely to come back to retrace breakout after that. That's exactly what happened. We retraced that 391.36 area. So we're looking to see, right, if we end up holding that, and if we do, we're still bullish moving forward. So we got that, gift overnight. We'll see if it ends up holding. We still got, more bank news that came out overnight. Not necessarily positive news. I need to pull it back up and see exactly what it was. But so Silicon Valley Bank's parent company filed for Chapter 11 bankruptcy in New York. So, it's kind of one of those things where you'll have to see what the ramifications of that are, but I know overall that has affected banks overnight. That, that happening most definitely affected. I saw, a headline, the regional banks, are back down now. So we talked about here this morning, First Republic, I think it was, right? Even getting that 30 billion, is still struggling here overnight in reverse course. Even after, right, they got the news of them getting that funding. So we got SVB, who really was leading the charge here, lower for these regional banks, coming back into the fold, and kind of messing things up once more. So once again, we're still in that type of market where it's, play light, see profit, take profit. Don't be full porting anything, right? Throwing your full portfolio into any one position, and just make sure that you recognize the risk that is, apparent here, and the risk that is pervasive throughout these markets. Because again, it's not like, oh, this thing just happens and then it goes away, right? We need to see some type of real normalization. We need to see some type of conclusion to this saga before we can do that. Otherwise, any play that you make is at risk. Any play that you make, any trade that you make at all this week is high risk. Understand that, right? So it could be a high quality setup and it falls apart because more news came out. That's just the game that you play, right? It's like you can go somewhere, you could get a steak, but 1 out of 5 steaks will give you food poisoning. That's just the game that you play. They advertised it. They said, hey, you could get screwed if you come here and you eat this food. The same thing in this market, right? The probability of you getting screwed, you getting messed over, is higher given the circumstances that are going on. So nobody is making you play, but if you do play, that is the risk that you're taking, right? And if you understand that risk, cool. You can't get mad at it, right? Expectations are everything, and correctly managing them is everything. If you can manage your expectations, then you can manage your risk management, all that stuff, and you can still play in a way that allows you to, feel good about how you're interacting with markets and also not blow up your account. So in terms of what else is happening, U.S. banking system remains sound. Janet Yellen assures Senate panel. Wells Fargo, ticker WFC, exec pleads guilty in fake account scandal probe. Again, Wells Fargo with the fake accounts and all this stuff. You just cannot trust them. Google, ticker GOOGL, to lift YouTube TV price amid rising content costs. American Airlines, ticker AAL, loses EU challenge over Delta Airlines landing slots. Shares of FedEx fly higher as cost-saving efforts bear fruit. Looks like British American Tobacco, ticker BTI, under pressure to explore U.S. listing. National Cinemedia, ticker NCMI, to cede control to lenders prepping for bankruptcy filing. Rocket Lab, ticker RKLB, gains before the bell after second U.S. rocket launch. So, we got we got Rocket Lab, rocketing forward, rocketing up here after they had a successful rocket launch. And then Amgen, ticker AMGN, deepens job cuts amid pressure on drug prices and inflation woes. More job cuts. What else is new? Sarepta, ticker RSPT, slides on FDA advisory meeting for muscular dystrophy gene therapy. So that'll wrap us up here for the pre-market rundown, March 17th, 2023. Last trading day of the week, last opening bell of the week, last closing bell of the week. Make sure that you resolve to move in patience, right? Execute when the time is right. And just don't push yourself, right? Don't force anything that isn't there. Roll with what the market gives you and take advantage of those opportunities, because no one sitting here has enough money to make an opportunity in the market, right? I think that's very important. All we are doing is take advantage of the opportunities that present themselves. We do not have the ability to create any opportunities in the market, right? Only take advantage of them. So, you take advantage of what's there. If it's not there anymore, it's not there anymore, right? But overall, it's taking what you get, not thinking that you can bull rush your way into it, because that can't happen, right? There's too much money for our little contracts to do anything, but you can't position yourself to profit. So, as always, if you got even one little valuable morsel of information from this session, just show love to the account, right? Like the Instagrams, right? Comment. Like the YouTube shorts, right? Comment. Like the TikToks, as much as I don't really like TikTok. Interaction, right? All that helps me. It helps us continue to grow and to continue to do this good work, like coming here for free and breaking down the important news each and every day before market open, right? I'd much rather take my leisurely time and hang out, and just kind of go over this myself. Some mornings, right? Some mornings I'm super happy to be here. Other mornings I'm like, oh man, I don't want to be on camera and talk to anybody for at least 3 hours, but I'm here, right? So, kind of being here and supporting me in the same way that I support you ends up being a huge help for me. So make sure you do that, right? If you like free value and you like money setups, right? Money setups and opportunities. So everybody have a great rest of the day. Have a safe weekend. I'll see you on Monday for our next pre-market rundown session. Have a good one.